Ladies and gentlemen, good day, and welcome to Oil India Q1 FY27 earnings call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kishan Mundra from DAM Capital. Thank you, and over to you, sir.
Hi, and thanks, Atharva. Good afternoon, everyone, and warm welcome to the Q1 FY27 earnings call of Oil India. And to discuss the results, we have the management with us, which is represented by Mr. Abhijit Majumdar, who is the Director of Finance, Mr. Saloma Yomdo, Director Exploration and Development, Mr. Tralukia Borgohain, Director Operations, Mr. Bhaskar Jyoti Fukan, MD NRL, Mr. Ajay Kumar Sahu, ED Company Secretary, Mr. Raghunath Mishra, ED Business Development, and Mr. Abhijit Das, CGM Finance and Account. Now at this point, I will hand over the floor to the management for their opening remarks, post which we will open the floor for the Q&A. With that, over to you, sir.
Thank you, Mr. Kishan. Good afternoon, ladies and gentlemen. I would like to thank DAM Capital for hosting today's investor and analyst Concall for Oil India Limited. I am Abhijit Majumdar, Director of Finance of your company. I am happy to inform the investor community that I am joined by my colleagues on the board, Mr. Saloma Yomdo, Director Exploration and Development, Oil India Limited, Mr. Trailakya Borgohain, Director Operations, Oil, Mr. Bhaskar Jyoti Fukan, MD NRL, Mr. Ajay Kumar Sahu, ED Company Secretary, Oil, Mr. Raghunath Mishra, ED Business Development, and Mr. Abhijit Das, CGM F&A and CIRO. On behalf of the management, I welcome you to our Q1 26-27 earnings call covering the period April 26 to 30th of June 26. The financial results were approved by the board and duly published on 7th August 2026 based on statutory requirements. It gives me great pleasure to welcome our esteemed shareholders and members of the analyst community. I'm very pleased to inform you all that this quarter has been a great quarter as far as the company is concerned. The company has achieved stupendous milestones on several parameters, which all will be covered in the presentation that will follow. Your continued support, engagement, and valuable insights inspire us to pursue excellence in execution, uphold the highest standards of accountability, and create enduring value through sustainable growth. During the first quarter of 2026-27, our performance reflects the strength of our operational foundation. We maintained steady progress across all core business activities, advanced our drilling and development programs, and continued to uphold the disciplined approach to financial management. These efforts underscore our commitment to delivering consistent growth while creating enduring value for all stakeholders. So I will now hand over to Chief Investor Relations Officer, Mr. Abhijit Das, who will provide an overview of the first quarter performance. Thank you.
Thank you, dear sir. Good afternoon, ladies and gentlemen who have joined us on this call. I take this opportunity to share Oil India's operational and financial highlights and the performance of our material subsidiary, NRL. From operational point of view, we have achieved 1.707 million oil and oil equivalent of production during this quarter. The crude oil production for the quarter was 0.95 MMT, which has increased by 11+% on year-to-year basis. Our Daily crude oil production has ramped up to 10,921 MT per day on 27th of June 2026, which was highest ever daily production of the company has ever recorded. The natural gas production on quarter to quarter has increased by 0.4%. From exploration and development funds, the progress has remained strong, in fact, much higher than what we have achieved in any of our previous years. Our company has drilled 17 new wells during the quarter, out of which 7 are exploratory wells and 10 are development wells. From financial front, the crude oil price realization was $98.73 per barrel, vis-a-vis $26.2 per barrel as compared to the previous year. The natural gas price stood at 7.19 MMBTU in this quarter as compared to $6.72 in the previous quarter of the last financial year. The standalone operating revenue of Q1 FY27 is 7,958 crore, which is highest ever quarterly revenue earned by Oil India Limited since it got listed in the financial year 2009-2010. We have also achieved the highest ever EBITDA during this quarter, which is 4,605 crore, as the margin is 54 plus percent as compared to 34 plus percent in the previous quarter of the last year. The profit before tax for this quarter is 3,742 crore, which is highest ever quarterly profit achieved by the company after its listing with the stock exchange. We have also achieved the highest ever PAT in this year, which is 2,000 in this quarter, which is 2,870 as compared to 813 crore in the previous year. Our earning per share stood at 17.65 per share as compared to 5 per share. Our earning per share stood at 17.65 per quarter as compared to 5 per share in the previous quarter. The performance of our material subsidiary NRL. I take the opportunity to share with you the performance of Numaligarh Refinery Limited. The operating income of our material subsidiary was 9,146 crores, which was 45% higher vis-a-vis Q1 of FY26. The capacity utilization of the refinery was 105% as compared to 105%, and the distillate yield is 87% for the quarter. The gross refinery margin is $35.95 per barrel as compared to $5.02 per barrel in the previous year. The EBITDA was 1,843 crore as compared to 786 crores as compared to the previous year. The PAT the company has registered in the current quarter is 1,305 crore as compared to 488 crore in the previous year. From consolidated point of view, I like to bring to your knowledge that the company has reported the operating revenue of 12,886 crore and registered a PAT of 4,026 crores, which is also highest after the company got registered with the stock exchange. Our performance in the first quarter of FY27 reflects the strength of our operational fundamentals and a disciplined approach to financial execution. As we chart the path ahead, we will continue to focus on delivering execution excellence, enhancing production capabilities, and unlocking long-term value across our portfolio. With that, I would like to conclude my remarks. We now welcome your questions and look forward for an engaging discussion. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Probal Sen from ICICI Securities. Please go ahead.
Thank you for the opportunity, sir. Very good afternoon, and congratulations on a good set of numbers. Firstly, just a clarification, when you mentioned about the production reaching 10,921 tons of oil per day on the 27th June. Just wanted to understand what is the run rate right now for the second quarter as such? I mean, can we expect it to sort of ramp up and maintain at this level, or, it was basically reached? I just want to get some understanding.
So, this is.
Thank you for the question. I'm requesting Director Operations to respond to the question.
Sure, sir.
So this is Dr. Kumar, Director Operations. So as you have seen that we are ramping up our production this quarter, one of the finest production we got. But as of now also, we are increasing our production because of we are doing well in all the three fronts. You can see that the first one is the well intervention and workover activities. Earlier days, we didn't got such a good workover result, and we have done many systemic improvements in terms of workover. Like we have now have a good practice in place, which is called SW high level workover program committee, planning committee. So this is called planning board meeting, SWPMB. Now what we do is that myself, along with Director Exploration Development, also sits together and do it very, very in an integrated manner. The selection of the wells, everything. Also, on the other hand, we have one particular aspect called that is done by Director Exploration Development, but where I am also in my team, that is called EDPMB, Exploration and Development Portfolio Management Board, similar to workover and production areas we do for new wells. So where I am also an inventor. So now the things are a little bit different. It is not done in earlier days. We are doing it in a very, very integrated manner along with exploration and development. So you can see that we are doing very well in all the three fronts, including workover, well intervention, and also well optimization and drilling. So at present we are on a path where we can see that we are going to achieve close to 1 MMT each quarter this year. The rest of the quarters we are yes 1 MMT. Now you are getting 0.950 na 0.95 MMT, which we are going to achieve most probably by this quarter. We should achieve if everything remains equal ceteris paribus. Then given everything going good and nothing adverse happens in the field, we expect that we will be reaching 1 MMT every quarter from now onwards. So let's see. We are keeping our fingers crossed. This is what I can tell you. And as of now, after that production, we have mentioned is 10,921 no? For the last quarter. We have increased into 11,017 on 3rd of August.
Okay.
So I think we are on a path where we want to increase our production. That's what I can tell as of today. Anything else if you have, I'll reply you later. And maybe the Director Exploration Development also, if you want to. Okay. He doesn't want to. Okay.
So
Got it, sir.
basically, we are on growth path.
Yeah.
We are surpassing our own records. We are challenging ourselves, and we love to challenge ourselves in the days ahead as well.
Understood. Thank you, sir. The second question was with respect to gas production. Now, I do understand that there are still some monetization challenges. If you can update us a little bit in terms of the progress of the monetization downstream pipelines that are under different stages of implementation, and when can we expect maybe a ramp up back to the 0.85, 0.86 BCM levels, or rather 0.8, 0.83 BCM levels that we were doing earlier. That'll be very helpful.
Actually, there are many hiccups that happen because of the shutdown of the downstream industries. This is because of that BCPL took shutdown, and at some point of time, maybe it means this is a yearly shutdown they take. The other thing is that seasonal variation will also come now because from October onwards, in tea garden they will take a little bit of less than what we are doing as of now. So, on an average, what we are expecting is that if this pipeline comes, then we will have the evacuation bottleneck gone out of this whole story. So, by next year end, we are expecting that all the facilities will be done. And if we talk about gas, by 2028, we will be having all the pipeline, everything ready, and it will go to rest of India. Whatever gas we have additional gas. We are planning to send our additional gas, whatever 3.5 to 4 MMSCMD, we will be able to evacuate from that area. So that is, we are planning, we are thinking that it will be by around December 2027, it should happen. Yeah. Also, DNPL also, one small thing is there. Around 200 meters of line actually is required to be laid inside NRL. Now, DNPL has got a new mandate from the government. PNGRB has given them as a common carrier. Now, what will happen? When NRL, if there is less intake in NRL, then we can put it into the main line and put it into the IGGL. And when an IGGL can distribute it in the rest of the places they are doing, like to NEGGCL and also Purba Bharati gas in Lower Assam. So this is going on. This will take a few months, 2-3 months maybe maximum. Once it is done, then we will have more evacuation of gas from the present capacity also.
Got it, sir. So what I understand is FY20.
Would like to add something.
Like to
Fine. In fact, in the past as well, we have transported gas beyond NRL. That has already happened in the past. Now, this particular communication formalizing DNPL as common carrier has come. So that will only help us do what we have already done in the past. And as DO has already mentioned, that once IGGL comes into being, then there will be no stopping actually. We will be able to overcome the seasonal challenges that are there, the regular shutdowns that the existing customers that they take. All of those can be overcome once these two facilities come into effect. Only a 200-meter thing is still to be done within NRL campus. And IGGL by end of the next financial, it will be over. So things will be pretty smooth for us as far as gas is concerned.
Got it, sir. So if I understand correctly, FY27 and maybe H1 FY28 may see slightly flattish or slower improvement, and then a big jump can be expected maybe by the third or fourth quarter of FY28 in terms of achieving our long-term target of getting to 5 BCM on an annualized basis.
28th first quarter.
Got it.
The example will happen in 28th first quarter.
Right. Last question, if I may, sir.
So I said 28, 29. So
FY29.
29, yes.
FY29 first quarter. Got it.
We'll have an additional 1.5 MMSCMD by virtue of NRL coming up.
Yes.
This will be in this financial year.
That is already.
So that
augmentation already done, because now once NRL also gets into operation from suppose next January, then definitely there will be increase in gas offtake on their side also.
There will be an immediate spike in the offtake when NRL comes into being, and maybe NRL by end of. Fukan sir, would you like to add anything here?
Fukan sir.
Yes. I have only a couple of things to add. As
Please,
So as Director Ops has already told that DNPL has become a common carrier. Currently the pipeline, as you know, is 1 mmSCD. As we will be able to connect with a 200-meter pipeline from Numaligarh to IGGL, and we will be in a position to give them shutdown so that they augment their capacity from 1 mmSCD to 2 mmSCD to immediately, then thereafter up to 2.5. So they were requesting for a shutdown because of the geopolitical thing, because it would have resulted also in a shutdown of the Numaligarh refinery, and we needed diesel and petrol badly because of the geopolitical situation. We were not being allowed to give the shutdown to them. Now that the things have eased and we can do away with the shutdown because we can operate with the gas from the IGGL due to this 200-meter connectivity, which is going to come in 2-3 months' time. We will be in a position to give a very short shutdown to DNPL to augment their capacity to 2 and eventually to 2.5. That gives a head start of around 1.5, which if not consumed in NRL can also be given to the national grid. So the fact is that NRL is going to start consuming 1.5 additional gas perhaps in the second or third quarter of next financial year. But before that also, this 1.5 mmSCD can find their way to national grid. That is the limited point that I wanted to make. Yes.
Understood, sir. If I can just sum it up, I don't have any other questions. So if I look at 1.5 mmSCMD, that translates to maybe about 0.5 BCM coming through gradually over calendar year 2027 as NRL's commissioning is done and the 200-meter connectivity is done. And then when all the other pipelines are in place, another 2.5 to 3 mmSCMD or 2 mmSCMD can come through, which is essentially another that 1.5 BCM. That is how we go from currently 2.93 BCM to somewhere around 5 BCM by FY29. Is that the proper way to sum it up?
Yes.
I think that's the correct understanding.
Yes.
All right. Perfect. Thank you so much. I'll come back if I have more questions. Then all the best.
Thank you. The next question comes from the line of Vivekanand from Ambit Capital. Please go ahead.
Yeah, hello. Thank you for the opportunity. So, Dr. Ranjit, 2 questions. So, the recent regulatory changes that have...
Excuse me. Our CMD, sir, is not attending this Concall.
I see. Okay, apologies.
But rest of the board is
So,
on here.
yes, Mr. Abhijit, yes. My question to you is on the recent regulatory changes and budgetary support that has been given to the upstream sector. How should one look at this in the context of your CAPEX program for the next couple of years? Because my understanding is that you have drilled around 25 exploratory wells last year. Just to help us understand how your exploration program will look like in FY27 and 28, both in terms of wells drilled as well as in terms of capital outlay, considering the reimbursement that the government is giving. That is question 1. The second question, I see that NRL has reported an exceptionally high GRM, and this, I believe, would include some inventory gains. Could you help us understand the normalized GRM that NRL reported this quarter? Because we understand 1Q FY26 had refining losses, and this quarter is likely to have had inventory gains. Thank you very much.
Sir, could you take this question?
Okay,
I am requesting DED sir to take this question.
the first question was about the drilling plan for 27-28 and how we are going to support the CAPEX for that, right?
Yes.
Like last year, we drilled 74 wells, and this year we are targeting 100, which includes onshore as well as offshore. So currently we are on track to achieve that big ambition of completing 100 wells. And going forward,
we would obviously like to stretch ourselves further and try to again ride on a 10% at least increase in the number of wells to be drilled. Now, whatever wells that we are drilling, primarily in onshore, is from our own resources. But you've seen that the current acreage holding that we have, about 55% of them are in offshore. And the chunk of them are in deep offshore and ultra deep offshore. So with the new PNG rules which have been announced, there are a lot of opportunities for enhanced exploration. For example, if you feel that your block is extending beyond your exploration lease, then you can also place your rights for further extension of for the lease area to bring it under your exploration campaign. Then there are other things, and most recently is the Samudra Manthan, which has been announced. The formal nitty-gritties are yet to be announced, but it has already been announced that some amount of money will be reimbursed by the government for seismic activities, and around 675 crores per well, which is the maximum ceiling, will be provided for drilling deep water and ultra deep water wells. And also some 10,000 crores or something will be utilized for common infrastructure hub. And so with this, especially for deep water and ultra deep water, we have already worked out and chalked out a plan where we have identified how many wells will be drilling in the deep water and ultra deep water in the next couple of years. Especially since we have already acquired the vintage 2D and 3D data, and they are currently being processed and interpreted. In the deep waters and ultra deep waters of Mahanadi and KG, we have already completed 4,200 line kilometers and 5,300 square kilometers of 3D data within a year of the PL being awarded to us. So by January, we'll be finishing the seismic acquisition, processing, interpretation of the Mahanadi and KG basins, which is roughly about 40,000 square kilometers. As of now, we have already identified possible prospects to be drilled, and that is the reason why we have already tendered out the rig requirements. So the first rig is going to come in June, July 27, and the second rig is going to come by March 28. And that will kickstart our deep water exploration campaign. And one well we are also going to drill next year in Mahanadi, but that is also going to be sponsored by the government. 800 crores will be sponsored as part of the stratigraphic well campaign. And then the other wells we are going to take up through the Samudra Manthan route, where they'll be supporting us with the funds. And most importantly, we are also de-risking these prospects to be drilled, because apart from our in-house and external consultants, Total is also looking at this data in each and every detail and advising us. And now Petrobras have also come on board. They will also be doing an independent interpretation of this data, so that they will also come up with their own independent interpretation. So this is in broad, is what is the outlay that we have for us in the next coming years. Does that answer your question?
Yes, just small follow-ups. So one is, how much capex did you incur in 1Q? And if you can give a bit more details about the wells drilled, how many were exploratory last year? My understanding is around 24. How many exploratory wells are you planning to drill this year? And if you can give a breakup of onshore versus offshore, that will be great. Thank you.
So for the capex, if we have asked the question for how much we have actually spent for Q1 27, the total amount spent is around 3,050 crore, which for survey it is 450. For exploratory drilling, it is 1,230 crore. Development drilling, we have spent 600. For our capital equipment and our projects, we have already spent 350. And investment in our subsidiaries and joint ventures and overseas investment was around 350. So it sum up to around 3,050 crore for FY27 Q1. Our total budget estimate for the whole year is, as of now, it is 8,600. So it will undergo some changes and revision during our next review. And actual expenditure for the previous year was 13,026 crores.
So FY25, we drilled 22 exploratory and 35 development wells. FY26, we drilled again 22 exploratory and 52 development wells. And FY27, we are targeting 42 exploratory and 57 development wells.
Right. Thank you. Can you answer my question on NRL now? Thanks a lot.
So, yes. Fukan sir.
Yes.
So
See, I heard that question on the GRM. See, I think the GRM reported was 35. That accounts for around 2 crore that we have gained in terms of inventory gain. So if you back that out, it will be 33, 4 GRM. This GRM increase is basically because of the difference between diesel and crude prices, MS and diesel and crude prices. So those rates were extremely high. In fact, this is after backing out the discount that we had to give to OMCs to keep the prices stable as a understanding. So therefore, this is the GRM that we had. So generally, our GRM hovers around $7 to $8 that you may have observed in last annual reports and all. So now we are clocking in the first quarter around 35. That includes 2 crore as inventory gain. If you back it out, it will be 33. So did I answer your question?
Yes. Thank you very much.
Yeah.
Thank you. The next question comes from the line of Somaya V from Avendus Spark. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So my first question is on NRL expansion. Could you provide us an update in terms of the commissioning? So earlier, I believe DTU units were expected to get started. So where are we and what is our expectations in terms of output for this year and also in FY28?
I think I can answer this question, MD NRL.
Please go ahead.
Yeah. So as we had in the last interaction, we indicated that in the first quarter we will be commissioning our CDU video. We have mechanically completed that unit. We had subjecting it to inspection by OISD followed by PESO. These are statutory inspections that are required to be carried out before we do a startup activity. Otherwise, we are ready for startup. DSDT unit is ready. SRU unit, which is required prior to commissioning of DSDT unit, is almost getting completed. Maybe another couple of months' time, we should be able to start the DSDT along with SRU. So these 3 units will be commissioned by, say, October or November at best. And rest of the unit, we are still taking a target of commissioning by 31st March 2027. So having done that, our actual production in a graded manner will start from next financial year. Gradually, we will heat up to around 75% of the total capacity utilization by end of year 27-28. So at Q4, I think we will hit around 75% of our rated capacity of 9 million tons. So that is what our plan is.
Understood, sir. And also on the related infrastructure there, in terms of the Paradeep to Numaligarh pipeline, so there was a few kilometers that was pending. So any update there? When is that expected to be?
Yes, actually, there have been very good progress over there also. Entire stretch of ROU, barring only 8 kilometers, stands acquired as of now. So we are in a good shape there. We are getting good traction, good support from the governments associated with our OU because we are traveling through 4 states. So all of them are supporting us.
By December of this, it is.
By December, we will commission the pipeline, yes. October, we are taking a target for mechanical completion. Yes.
Understood, sir. Sir, also in terms of...
Sorry to interrupt, sir. May I request you to
last
please
clarification.
rejoin the queue? Okay.
It's okay. Can I just ask one clarification? Hello?
Yes,
Yeah,
sir, you
hello.
may go ahead.
Yeah, thanks. So just on the CapEx part on NRL, so also if you could just help with what is the net debt at NRL of the 35 to 40,000 crores of expansion CapEx, how much have we spent so far and what is the plan for the next couple of years?
We have invested around 30,000 crores so far. So we should be completing the refinery project around 34 to 35,000 crores. And we should also be completing the PPU project by spending another 7,200 or 7,300 crores. So that is the outlook of CapEx that we have.
The current net debt at NRL and what is the actual cash CapEx that we have spent so far?
We have 30,000 figure that I spoke is a total spend that we have made. Out of that, around 26 will be around 19 will be the borrowings that we have done.
Okay. So the debt component is 19,000 crore. Yes.
Yeah.
So this is at NRL level?
Yes, absolutely NRL level.
Okay. And the Concall level, including upstream and international?
Sorry?
At the consolidated debts.
From standalone point of view, for foreign investment, we are having $1.4 billion loan. From oil, so far oil is concerned, is only for our Mozambique project. And in consolidated level, another one bond we have from our foreign subsidiary in Singapore, which is $550 million of bond, which is to be repaid in the next year, 27 May. And from NRL point of view, as I already told, it is 19,000 plus crores. So this is in a group level. If you see some of these 3 figures, this will be our debt, total debt in the group level, which is around 37,233 crores is our total debt.
Got it, sir. Helpful. Thank you.
Thank you. Ladies and gentlemen, you are requested to restrict your questions to 2 questions per participant. I repeat, you are requested to restrict your questions to 2 questions per participant. We have the next question from the line of Yogesh Patil from Dolat Capital. Please go ahead.
Thanks for taking my question, sir, and congratulations for the good set of numbers. Question pertains to gas discovery in Vijayapuram, Andaman. What are the upcoming steps or the procedure plan for this field to help us gauge volume reserves and that can be produced commercially? If there is any new exploratory well plan for the Andaman, what would be the timeline for this completion? And when can we anticipate the results? This is my first question.
Well, as you are aware, we have drilled so far 3 wells in Andaman. And first well, we drilled and we went to the second well because the sand that we encountered was tight, and with the current testing system, we couldn't test the well. So we decided that we will come back prepared for testing the first well. So we went to the second well where the gas was reported. Then in the second well, but it was flowing very intermittently. But in the third well, which we drilled, the gas was flowing continuous. So that was a technical discovery, which we have also intimated to the DGH, which is the statutory authority. So in the first well, we are now going back. And even as we speak, we are preparing to test the sand there using hydrofrac, for which a separate contract has been mobilized. And the hydrofrac is a well stimulation mechanism, which can help you to test tight sands so the fluid or gas can come out easily. So this will take about a month in Vijayapuram 1 for the testing to be complete. And then we will demobilize this current rig, semi-submersible rig that we have, because it has completed its contractual tenure. So the fourth well we are going to go in Andaman with a jack-up rig, and this we are going to be drilling by December this year. And the fourth well is further up north in the Andaman block at the water depth of about 90 meters. So this rig is actually currently drilling in our KG offshore DSF block. So once we complete this well in KG offshore, which in a few days we will be testing in KG, then we will mobilize this rig to Andaman and drill the fourth well. In the meantime, based on the discoveries in Vijayapuram 2 and 3, we have secured additional 3D seismic data, because the discoveries which were made were based on 2D data and 2D data interpretation. So we thought we will have an opportunity to map the subsurface better using 3D seismic. So in and around Vijayapuram 2, we took 300 square kilometers of 3D, and in and around Vijayapuram 3 also we took around 300 square kilometers of additional 3D. So this 600 square kilometers of 3D data is currently being processed by Schlumberger, which is going to be completed by October. So that by January we have completed the interpretation, and then after going through our normal assessment and QC, especially leveraging on the partnership technical services agreement that we have with Total and Petrobras. So after having a detailed discussions with our technical service providers, based on the new 3D data, we will take the next course of action to undertake the campaign in Andaman, in and around Vijayapuram 2 and 3, for which most probably we'll be drilling appraisal wells, and that will help us to delineate the reservoir further. And also with more conclusive testing coming up, we'll be able to come up with some numbers regarding the size of the structure or the fluid in place, gas in place, and possible production rates.
Any possible timeline that you declared or shared the results in terms of the gas reserves into that field in next 6 months, 9 months down the line after doing all these exercises?
Yeah, so the fourth well we are going to drill by December. So in about 3 to 3.5 months, say by March, we will be able to have some assessment of the fourth well, which is again a pure exploratory venture. Then the appraisal wells that we are going to drill in Vijayapuram, near Vijayapuram 2 and 3, that will depend on the interpretation that we complete by January. And by February, we should be able to take a call, like how many additional wells we will be required to be drilled in Andaman.
Sir, my second question related to 8% YY decrease in gas production. How long will the petrochemical and power plants continue to use the less gas? Because we have been seeing this issue of a shutdown or less gas consumption from the petrochemical side. The question here is that could you throw some light on the challenges the BCPL is encountering consuming a less amount of a gas, or anything which you can highlight on the less consumption from the side of power plants and any lower offtake?
Actually, we supply, suppose as for power consumption, we supply to NIPCO. So NIPCO, what happens is that NIPCO, I would like to lay it for you because of how the power is they are having hydel power at the same time, and they are having the gas-based power project. Now with the increase in gas price, they are not actually able to match the price of hydro. So in that case, what they do, they little bit of kind of try to consume less, and they try to increase the hydroelectricity. So this is what they do. Number two, like you have said about the petchem, so we are basically BCPL survives on kind of what you can call it a subsidy. So in our part of the players, actually, as far as the economy goes, maybe they are not able to make very great headway in terms of finance and in terms of economy of scale. I think that is their issue. But once we have this connectivity, then we'll definitely have it exported to western part, and also if required to the rest of the country. But another thing, there is some upside is there, because government of Assam is also taking interest in increasing the domestic supply of gas, CGD. So we still have some upside, and we are in talks with our Assam gas company so that they increase their intake, because there are a lot of areas for inroads. So that gas consumption can increase if government of Assam gas company increases their consumption. Otherwise, this situation continues. So I cannot tell you that. But the only thing is that since Numaligarh is coming up, and we have like already told that we will be supplying a total of 2.5 to Numaligarh, or maybe close to 3 to Numaligarh Refinery Limited. Once they start ramping up their production. So as you already told, it is coming up. So by
Ladies and gentlemen, the line for the management is disconnected. Please stay connected while we reconnect. We have the management line connected with us, and you may proceed.
Fokon sir, you are also joined in this call now?
Yes, sir. Yes, sir.
Yes.
Okay.
So shall I complete my?
Yes.
So the other thing is that we have a DFL, Duliason feeder line, that is being done by IGGL, Indonesian Gas Grid Limited. So that once that is connected, we have the gas immediately. We can evacuate. That should not be an issue. One good thing about that line is that most of the places we have the ROU. We have our own ROU. Like they will pass through in some parts, except some 30-40 kilometers. Rest of the places we have the ROU. One of BCPL. The other one is I think ONGC, and so there should not be any much issue in laying the pipeline. So this is already going to be constructed very soon.
Sir, BCPL consumptions have improved after the maintenance shutdown is over, or still the BCPL consumption levels for the gas are still lower in the current quarter Q2 also?
BCPL is stable, no?
BCPL offtake more or less, it has picked up and it's currently stable.
So they take net around 1.35, 1.25 to 1.35 they take. So and 6 point, so then rest around 5.25 they take.
4.35 is returned back.
4 is returned to us. And that 4 is a PNGRB spec gas.
If we look at BCPL, we are basically taking a very narrow view. Why we are focusing on DFL, DMPL, these are all long-term things which will help us kind of transport the gas to other parts of the country. Merely relying on BCPL or NIPCO and few other customers in the northeast, we all know that will not help us evacuate the potential that we have. So BCPL, little up, down, this will not really change the scenario drastically. For us to really have a head start, big head start, is DFL has to happen. DMPL has more or less happened, except for the 200-meter stretch within NRL. That will happen in due course, as MD NRL has already pointed out. So that is the larger picture.
Thanks a lot, sir, and all the best.
Thank you. The next question comes from the line of Varatharajan Sivasankaran from Antique Limited. Please go ahead.
Thank you for the opportunity. On the feeder line, has the tendering been done and the construction has it started?
Yes, sir. So on the feeder line, there is already a progress of around 20% of the project, and the PMC has already been engaged. Work is progress as per plan.
Cool. Secondly, there's a small clarification on this issue. Once the 200 meter is completed, irrespective of how Numaligarh ramps up, you are still in a position to put it in the IGGL, isn't it? So the common carrier is already in place, so you're not dependent entirely on Numaligarh for that additional 1.5 MMSCM. Am I right?
You are correct actually. Once this 200 meter is there, so and DNPL being a common carrier, so even if NRL doesn't consume, it can travel to IGGL and eventually to the national gas grid.
And this you think will be ready in the next 2-3 months? Is what you're saying?
2-3 months it should be ready. Yes.
Fair enough, sir. Thank you.
Thank you. We have the next question from the line of Sabri Hazarika from Emkay Global Financial Services. Please go ahead.
Yeah, so two small questions. Firstly, you mentioned in NRL that you gave some discounts. Was this like the windfall tax related discount? How much was the quantum? And if not for the discounts, then what could have been the GRMs?
The GRMs would have been much higher because we have been giving some discount to OMCs. And the first quarter, it was around, we started off with a very high number of 13 rupees per liter for petrol, and which eventually came down to 3 rupees per liter by the end of this. And then for diesel, it was started with 10 rupees per liter, and eventually it was nil by the quarter end. So they keep calibrating based on the international price of diesel. So our DRM would have been much higher. So that is what I can confirm you actually. Yes.
30 rupees per liter to 3 rupees per liter in petrol and 10 rupees per liter
13,
to
1, 3 to 3.
Okay.
1, 3 to 3 and 10 to nil. So those were the kind of discounts that we were required to give to OMCs. Yes.
So right now also we are at zero, or right now again it has come back?
No, right now it then again reappeared, so we are giving now. But it gets calibrated month on month to reflect the delta between crude and product prices. Yes.
Is it connected to the SAED or it is like independent of the SAED?
It is exactly as per SAED.
As per SAED, right? Okay, sir. And Fair enough. Thank you. And second question is on this oil production. So now if we are at 1 million ton every quarter, so technically we have hit this 4 million ton target of that mission 4 plus which we had. So is there any revision in guidance for oil production next year, or are we looking to maintain it at this level for FY28-29 or going ahead?
Yes, Mr. Sabri. You see, we are ramping up the production by doing whatever can be done. But to increase to the next level, we are also doing some other things like near field exploration. At the same time, we are doing like the workover, production enhancement, optimization. These are some of the drives, and we are increasing with it, getting whatever good technologies we can, including hydrofrag, you can say radial drilling. So we are doing. So we have some thoughts in mind to go to 4.2. If you look at our FY29 kind of target, we are targeting up to around 4.2. Maybe it goes beyond that. But that will also depend on a little bit of kind of our own near field exploration. That is one important aspect. Yes.
Okay, so 4.2 from the main producing area. This doesn't include any deep water, nothing of that sort.
Mainly main producing areas. And also we are ramping up production in Rajasthan.
Okay, and just one last small question. Any impact of the recent floods on your operations?
No. In our areas, there was no impact. We have operations in Sibsagar and also in Saraidev, but these are in the western part of the eastern part of Sibsagar and Saraidev. So our place, like not much of flood, and but definitely the nearby areas got submerged and all those things. Yes. No impact on our side.
Got it, sir. Thank you so much and all the best.
Thank you.
Thank you. The next question comes from the line of Mayank Maheshwari from Morgan Stanley. Please go ahead.
Yeah, thank you for the call, sir. So with all this pipelines that you're kind of thinking about completing and the 200 meters pipeline for NRL, what do you think will be your target F28 production for natural gas next year? And also, if you can just help us understand what percentage of the gas is coming as new well gas pricing, or you are not being able to get that yet?
You see, I will not talk about the new well price. Whatever incremental production will happen will be all new well price, because the APM part will be over by this time, because whatever new gas we will be doing will be extending our perforation. We will be having more testing, and already some areas we have already discovered, we have tested those areas, and we know that we have the gas, and we will open up those. So these will be all new gas. There will be no kind of old gas kind of situation. So these will be all new gas. Number two is that you were talking about numbers in terms of total production in coming days. Once we get DFL connected, we are into 5. There's the bottom line. We are 5 BCM from the very first day.
We have always maintained that ramping up the production by itself is not a challenge. Absence of the network is a challenge, which we are kind of trying to address. And once the network is laid, it is ready for evacuation, ramping up production will definitely happen.
Because
I think that's very clear. I think I was just saying.
And we know that this is the production potential of these areas. Yes.
I think, that's very clear. I was just thinking that now that the NRL is getting completed and ramping up second half of next year, and you have this pipeline as well done, maybe I think the ramp up for next year, if you have some numbers around that will be interesting to get for natural gas.
3.8. Next year will be 3.8 BCM. So now
3.8 BCM. Got it.
On an average, we are shutting down some wells, at least 30 wells. We are always shutting down. When we will be opening all those wells, On an average, if there is low consumption, we start in up to 60 wells. So the situation is like this. So it becomes an issue. So these wells are already there.
Production will automatically pick up.
Yeah, that's fair. And my second question was more related to NRL. Was there any benefits on excise duty you were able to get this quarter, or it's very small a number?
Hey, you have seen that excise duty was calibrated to keep the retail prices down. So obviously there will be a squeeze on the excise benefit that we get. So so to that extent, yes, our excise duty benefit realization has come down. So it was not a big number, but it was a sizable number.
Got it. So the reason I'm asking you this is because $33
Sorry to
per
interrupt,
barrel on GRM.
sir. May I request you to please rejoin the queue for any follow-up
Sure.
questions? Thank you. The next question comes from the line of Nitin Tiwari from Phillip Capital India Limited. Please go ahead.
Hi, sir. Good afternoon, and thanks for the opportunity. Actually, some clarificatory questions. So continuing on the line of questioning on the GRM bit, I mean, if you could just, for our understanding, help us understand that the $35 GRM that we have reported, does that include the impact of both SAED and the excise benefit that you get, or the excise benefit is not included in this? So, and subsequent to that, if excise benefit gets included, then what could be the GRM?
The excise, when we report GRM, generally it is devoid of excise benefit, and it only includes the inventory loss and gain. So that's what I clarified. And also it is netted off the discount that we are providing due to the SAED. So does it answer the question? Otherwise, you know what is the excise duties of petrol and diesel. You can quickly calculate the impact of those products in those benefits into our GRM. So whatever GRM that is visible, $35, is not considering the excise duty benefit that we are getting.
Yeah, so the reason I asked is because SAED is also a special excise duty. I mean, so I was wondering if both impacts are netted off and then you've reported the GRM. But thanks for the clarification. Secondly, on your operating costs. So you basically spoke about an increased pace of activity, but the contract costs have come off as compared to previous quarter, and so also other expenses. So what are the key reasons for that, and how should we look at these costs going ahead down the year?
Since we are in the expansion mode, some plants are getting commissioned, so those actually is accounted as an expense as of now. But as we stabilize, it will be absorbed into our overall OPEX budget, and with commensurate revenue coming, we will be having similar sort of and much more lower per barrel operating cost. Our per barrel operating cost hovers around $4.5 to $5 today. It will come down to a level of $3.5. That's what our expectation is, because we will be rationalizing on the facilities and our throughput will be high. So that therefore the operating cost will come to around 3.5.
So thanks for answering that. This is with respect to NRL, I suppose, that you mentioned. I'm talking from the perspective of Oil India, where contract costs and other expenses have come down on a sequential basis. So what are the key reasons for that, and how should we look at these costs going ahead in the year?
No, the contract cost for the current quarter for Oil India standalone is 615 crore as compared to 470. That's what you are trying to understand from us?
Yeah, that is correct. So the contract costs are lower sequentially and other expenses are also lower.
Yes, the contract cost margin has gone up around 140 which we are carrying.
Sorry, sir, your voice is not very clear. Can you please come again?
See, the contract cost of around 146 crores, which has gone up during the current quarter as compared to the previous quarter, is major for our GNG cost in our offshore blocks. All of the cost was at par only. Contract has gone up. It is only GNG costs for our offshore blocks. Rest are, you can say, all in line as compared to the previous year.
Sure, sir. It was not very clear, but from what I understood, that on a YOY basis, you mentioned that some 100 crores of extra cost has come. Otherwise, everything else is in line. That's the right understanding?
Yes, it has several components. The one component which has basically consumed much of the cost is GNG, because we are into operations in the offshore. So there has been a high. Rest of the items are more or less similar.
Because of the seismic acquisition.
Yes.
Got it, sir. And lastly, sir, if I may, just one more clarificatory question. For everybody's benefit, if you can give your...
Sorry to interrupt, sir. May I request you to please rejoin the queue for any follow-up questions?
I just wanted the production targets for this year and next year. I mean, that's all from my end, if that can be given.
So this year, you see, we are already told that quarter on quarter, we are almost close to 1 MMT. So you can say that it will be around minimum 3.9 will be our production this year. So you can, that's what I can tell as of now. But we may touch 4 also.
Got it, sir. Thank you.
Now that we have surpassed 11,000,
we are expecting 3.9.
It's quite possible that we touch 4 this year itself.
Understood. Thanks for answering my question.
Thank you. The next question comes from the line of Amit Murarka from Axis Capital. Please go ahead.
Hi, thanks for the opportunity. So just on Andaman, so if I remember right, you had taken a write down of the Vijayapuram 2 well, whereas the 1 and 3 I think are still in as of now in your assets. So just wanted to get a clarity, like now is it fair to say that given that it's been like now 2-3 quarters since the well was drilled, it's no longer going to come up for let's say a review or a write down of the expense done on those 2 wells?
Well, Vijayapuram 3, actually, we just completed the testing sequence in July. Yeah. So that didn't come up in the first quarter. And we will be undertaking an appraisal campaign in Vijayapuram 3 also, based on the new 300 square kilometers of 3D seismic data that we have acquired. And so once we have the interpretation and prospect generation done by April, we will be able to take a final call on Vijayapuram 3. And Vijayapuram 1, we had to hold on because we didn't have the proper testing facilities at that point of time, because we didn't anticipate such tight formations in Vijayapuram 1. So we had to keep Vijayapuram 1 on hold, and even as we speak, our rig has been now mobilized to Vijayapuram 1, where we'll be stimulating the well using hydrofrac technology. And this testing campaign in Vijayapuram will take almost about this month of August. And post-August, post-testing in September, we will be able to freeze on the fate of Vijayapuram 1.
So, would you be able to share what has been the spend on Vijayapuram 1 and Vijayapuram 3?
That will depend on the testing results. Vijayapuram 3, I've already told you that we'll be drilling an appraisal well in that area. And if, based on the 3D seismic campaign, we see that Vijayapuram 1 or 3 maybe was not in a proper structural position, then we can always examine the feasibility of utilizing this same well to sidetrack and go to a desired position, which is which we can go up to 1,000 or 2,000 meters laterally, horizontally. And Vijayapuram 1 will take a call after the testing results, which will be concluded this month.
No, I got that. I just wanted to know what are the spends.
Sorry to interrupt, sir. May I request you to please rejoin
No, it's
the
a
queue
question which couldn't get answered properly. So I'm saying that what was the spend which was made on Vijayapuram 1 is what I was asking.
Vijayapuram 1, our spending has been roughly 1,000 crores.
1,000 to 1,000.
Yeah, it will be 1,000 to 1,050.
Okay. Got it. That's all from me. Thank you.
Thank you very much. We have the last question from the line of Bineet from Nomura. Please go ahead.
Thanks for the opportunity. Just a couple of questions basically on GST and royalty. I think there was a BSE filing. So can you tell us what is the total amount due on this GST and royalty? How much was provisioned, how much was paid, and what could be the impact in the second quarter on the P&L as well as cash flow? And similarly, on the Assam land tax, I think the government has withdrawn the case. So, and I believe All India has already not paid anything. So, is there any impact from that also on your financial statements?
Okay. So I'll take up the land question first. So in the recent the representative, the senior counsel of the government of Assam, he gave an undertaking to the learned to the honorable court that this particular law will be withdrawn. So it will be deliberated in the state legislature, and following the due process, the act will be repealed. So far, whatever we have shown in our financials, we have shown them as contingent liability. So it has not impacted our financials at all. And in the days ahead, as long as, we'll have to wait till it is withdrawn by the state. Once it is withdrawn, we will also kind of remove it from our books. So that is the position on Assam land taxation. And now, as regards the GST on royalty, we have all this while been providing for it. So it is again not going to impact our financials because every quarter we were providing for it since this new thing was introduced in 2017, right? From 1st of July 2017. So without interest, it would be to the tune of 2,500 crore. Without interest.
2 plus 1 over 2 crore is approximately 2.
Am I audible?
Yes, sir.
So without interest, it would be roughly about 2,500 crore. So our undertaking to the court was that the court has given us 6 weeks time to settle this, and we are trying to kind of make this payment as quickly as possible. At this point in time, I can tell you this much.
So, sir, within the next 6 months, the interest component doesn't have to be paid. Only the 2,500 principal component.
Absolutely.
Okay.
So prospectively, be no interest. We will only be paying the liability as it arises.
And this will be booked in the second quarter result.
Sorry?
This will come up in the second quarter financials, the 2,500 crores.
Yes. Second quarter financials, financials as such is not going to be impacted because
cash
we have
flow
already provided for it. So, but then we will definitely make a disclosure saying that this much amount has been released on account of GST on royalty.
Okay, sir. Thank you.
Right.
Thank you. We'll take that as the last question, and I would now like to hand the conference over to management for closing comments. Thank you, and over to you.
Thank you very much for your participation in All India's Q1 27 earnings call. A big thanks to DAM Capital for helping us to organize today's session smoothly. We trust that we have satisfactorily addressed your queries and provided meaningful insights into our quarterly performance and ongoing initiatives. Should you require any additional information or further clarification, please do not hesitate to contact our investors relation cell. The relevant contact details are available on our website. We sincerely appreciate your time, participation, and continued confidence in Oil India Limited. Your engagement is highly valued, and we look forward to maintaining an open and constructive dialogue with you in future. Thank you and have a great day ahead.
Thank you. On behalf of DAM Capital Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.